So I have scoured the ends of the earth looking for a proper housing calculator. One would be missing taxes, one would be missing an interest breakdown, one would be missing maintenance fees. There would always be something missing from no matter where I went online. So I had enough of it. I thought to myself, well, I'm a relatively intelligent person, so why don't I just make my own? So that's exactly what I did. I went into an Excel spreadsheet and I put everything that I could imagine that you would possibly need in there. What's up guys, my name is Mateo. I think I'm going to be able to buy my first investment property sometime in the next 2 to 3 years. And I want to really know what I'm doing when I'm getting into it, and I don't want to overpay for anything, so let's get right into the video, why you clicked on it, and check out the calculator that I made, because I'm super proud of it. So every single thing on the calculator is controlled by 1, 2, 3, 4, 5 different blue boxes. I'll leave a link to this down in the description below so that you guys could use it too. But let's check out this first little area with your costs. Alright, so this box right here is really what matters the most when you're looking at this calculator. So what we're looking at here is the total housing cost, percentage that you're putting down, and the interest rate that you're doing. And that's going to give you the total amount that you're doing in closing and updates pretty much every single box on here. You can see if I leave these boxes blank, we get a ton of arrows and everything goes to 0 here. So, for the purposes of this video, we're going to mainly look at one triplex that I was looking at just kind of for fun in my local area. It cost $369,000. Let's put down a percentage down of 5%, we're getting a FHA loan, and say we get a 4% interest rate. And that updates every single box you can see. And right here, if you look, we could also see that this particular property was bringing in an estimated $2,400 a month. Now what we're also calculating in this little box here is your principal that you're making every single month through this big string of numbers, average appreciation, and your yearly rent that you're getting in here. So you can see technically the amount of money that you're making off of this property is almost $50,000 a year. And that is in your first year. If we go over to our second year, you can see our principal is going to go up slightly. We're making slightly more, looking at the second year, third year, and fourth year. You can see the amount of money that you're making on this property is going up slightly every single year by roughly $200. But the big question is, how much of this money do you actually get to keep in your pocket? And that is when we would take all of this information and jump over here to your net value versus cash flow increases. So for cash flow, I'm looking at the total expenses that I'm paying every single month versus that rent that we're getting in. With these rates right here of 5% down and a 4% interest rate, we would be cash flow negative $300, but technically increasing our net value by $1,000 every single month by principal pay down with this property. So from a rental aspect, this would be really bad because you're still paying $300 out of pocket every single month in order to have this property. But if you're living in it and you would still pull those numbers, then that would be really good because technically you're only paying $300 for rent every single month. That would be really useful if you're doing something like house hacking. So if I were able to take this property and then rent out some of the units, but then still live in one, I would just lower the rental price that I'm putting everything out on, and then I would see the true cost that it's costing me to house hack that property. I'll make another video based more on house hacking in the next week or so, but it's a really good idea. It's what I hope to be doing sometime in the next 2 to 3 years. But how am I going to be qualifying for a house in the next 2 to 3 years? As you probably saw about a minute ago, right underneath all that cash flow information, there was this little chart on how much money you need to qualify for a house, so let's get right into that. In order to purchase this house, you need to be making a bare minimum of $30,000 without any other debts every single year. Ideally, the bank wants to see you closer to $56,000. If you want to guarantee that you get this loan, if you're making anywhere over $82,000, you'll be in a great situation. Just for fun, I also listed how much monthly income they're looking for qualification, or how much money you would have to be making daily, and also the hourly rate if you're getting paid that, but this does not take taxes into effect, so keep that in mind. If you're making $14.75 an hour, you're probably going to be making around $30,000, but after taxes, that's going to be a lot lower. So you have to take that into effect as well. Now I got that by taking a qualifying cost of $2,100. But be careful, don't think that you're having to pay $2,100 every single month, because you're not. In fact, if we go over here, you can see that your mortgage is only $1,600 every single month, when in reality, your true cost to buy that property is $2,700 every month. Now, this is the part of the calculator that really gets iffy, where a lot of different places get different answers from. I know that my mortgage price is dead on. With this down payment and this interest rate, you would be paying a mortgage price of $1,673.58 every single month. Where you might have to edit this calculator a little bit if you want to use it for your own personal use would be depending on your state property tax, how much you're budgeting for maintenance, what type of homeowners insurance you're getting, and the vacancy rate that you're accounting for. In this rental property, I'm accounting for a 6% vacancy rate just to stay extra safe. You can also see right here that it automatically puts mortgage insurance in if you're putting a down payment less than 20%. If we pop our down payment up to 20%, this calculator will automatically remove your mortgage insurance from your payment. So that'll take your total payment down from $2,700 to $2,100. But if we move this down to even 19% down, it's going to re-put that mortgage insurance back in, and that costs $300 more. This is all a lot of theoretical stuff. This is a skeleton. You should really get your quotes on how much you're going to be paying for mortgage insurance, and you should check the property's history for how much property tax you're probably going to be paying on it. I also have included right here, if you have any HOA fees, remember to put that in that box right there too, because you're going to have to be paying for that. Also, budgeting how much maintenance you're going to be keeping on this house. I'm saying 1% of the house's property value you should be budgeting every year towards maintenance. Now, obviously, you're not going to be spending $300 every single month on maintenance. Having that cash in the bank is really going to help you out and give you a buffer in case anything happens. And if you ever need to replace the roof, you're going to have cash on hand already, so it's not some big lump sum expense that you're really worrying about. But it's costing $2,100 a month to have this property rented out, but if you're a resident in it, it's going to be costing you about $1,800. I say that because your vacancy rate is going to immediately go away, and you're going to have to spend a lot less on maintenance, because chances are you're going to take better care of your property than any renter is going to. If we jump back up to the value increase of your property right here, with 20% down, you would be cash flowing approximately $263 on this property. This gives you a really good idea of whether or not it would even be worth it to try to capitalize on buying a property. Now, one of my favorite parts of this calculator that I made is the tax exemption that you can create just by buying real estate. Just by owning this property in the first year, you'll have a tax exemption of almost over $1,800. Now, remember to consult with a CPA before just taking my word for all of this. The way that I got this number is by writing off some maintenance that you're going to be doing on this property, writing off the property tax, and writing off the interest payment that you're doing every single month. So you're likely to get around $18,000 worth of value of a tax write-off through this property. If you didn't know, that's almost a $6,000 bonus than it would be on top of your standard deduction. Now, one of the most recent additions that I've done to this calculator is the roommates, quote unquote, I should probably put quotes around that, is if you decide to go in on this property with anyone else. This would mean if you went in on the property with one other person, your down payment would be $37,000 and monthly costs would be negative $131. That means that it's going $131 into both of your pockets every single month. I did this all the way up to 5 people. So if you went in on with 5 different partners, you would only need $12,000, but you would also only be getting $43 back every single month on this property. What my main purpose for this was for is if, say, I wanted to house hack with one of my friends, I then go take this property, change the percent down to somewhere around 5, so we're only paying $20,000 down. Then I would go over to the amount of rent that we're getting, and I would change that $2,400 to $1,600 because we're living in one of the units. This shows that if I went in on a property with this friend, we would both only have to put down $9,000, with a $554 monthly cost from both of us. Alternatively, I could come up with the entire $19,000 and I charge him about $600 a month. I'm then only paying $500 every single month to live in this property. Now, this is my pride and joy calculator right here. But there was one thing that it was missing. What if I wanted it for purely investments? What if I wanted to hire a property manager? And that changes a lot of things. So what I did is I made an entire separate copy of this and changed up just a couple things. With a property manager, prices are going to vary a lot. It depends on who you get, what they do, and what your contract says. So take this as a skeleton to see whether or not a deal would be worth it, and then run your own specifics with it. So if we go over with the property manager, that's going to add approximately $192, again, depending on what your property manager is doing and what your contract says. So just going back and forth between the two sheets, you can see they're very similar. It's not going to change your qualifying costs over here, but it will impact how much cash flow you get on this property, but it will also impact how much stress that you have actually taking care of this property. Again, do your own research, but it could potentially increase your tax exemption because if you're employing a property manager, you could write that off as a business expense right there. So I'll leave a link to this calculator down in the description below because I worked so hard on this and I wanted to share it with all of you guys because I thought that it would be really helpful. Remember though, this is only a skeleton build for what you could be doing. Have this gauge to look at properties and run the numbers before you even really start going for it a little bit more. Maybe input the specifics of what your bank says your interest rate's going to be and get a couple quotes on homeowners insurance and see how much that mortgage insurance is going to be costing you if you do pay under 20%. And remember to consult with a CPA regarding that tax exemption because again, every circumstance is different and I'm not a licensed CPA and you are not my client. So remember to consult with your own CPA to discuss your situation. I hope you guys really liked the video or found a little bit of use in it, if nothing else, finding it a little entertaining because I worked really hard on it and I plan on using that when I buy a property for myself. So remember to check the description down below. There's a link to Discover, getting a free $50 just by opening a credit card with them. Or if you want to start investing, you can click on the Robinhood link, getting a completely free stock just for signing up. Or you can click on Webull, which if you deposit $100 into their trading platform, you can get two, not one, but two free stocks valued anywhere between $800 and $1,600. That means bare minimum for signing up for the platform and depositing $100, you're getting $16 or up to $3,200 just for signing up and depositing $100, and that is insane. Remember to leave a like, subscribe, and check out the calculator down below. I'll make sure that that's down there so you guys can use it. Until next time, I hope that you have fun and we'll continue our financial journeys.